And good afternoon to our friends here in Australia, New Zealand, and good evening to those in Canada, the US, and elsewhere, and to those watching the recording. Welcome. My name is Michael Haynes, SME B2B growth specialist, working with small, medium businesses in the world of B2B, and welcome to the live stream show, Breaking Through in B2B, which is all about helping small, medium business owners how they can thrive in the world of B2B. Today, it's my great pleasure to welcome Brad Horan, who is the Managing Director of Lucrature Business Profit Enhancement, who helps us small and medium-sized business owners get more profits, time, and freedom. Brad, thanks so much for joining us today.
Hi, Michael. Thanks for inviting me. I'm really excited.
And viewers, please, as you are joining us, please drop a line in the chat, say hello and where you're from. And if you have any questions as well, please put those in. So, Brad, unbelievable. It's already, the 12th of May for us, those of us in the Northern Hemisphere, 11th of May, but we're coming up to middle of the year already. It's pretty crazy how fast the year is going. A big topic that is in the minds of all SMEs, SMBs, that's on top of mind is business growth and how to go about financing the growth. So I think it's a real timely discussion to be having, as a lot of businesses are really in that prep mode to move forward. And for us here in Australia, I think this live stream has just worked out really very well time-wise, as just last night was the federal budget. So to kind of kick things off, Brad, be interested in getting some of your insights with regards to what are some of the key takeaways with regards to our SME peeps. What were some of the key elements that you found that were most relevant to us that perhaps we should be mindful of and considering as we're starting to take charge and thinking about moving forward with business growth?
Yeah, I mean, I think particularly from the federal budget last night, there's a couple of things that stand out. For me, to be honest, it was a little bit underwhelming, and it feels like something where they're under-promising and hoping to over-deliver for the election. But ultimately, there are some key things that are beneficial. So one of them is the extension of the capital write-off. So you can buy equipment, write it off immediately. That's great, but of course you need money to buy it. So, you need to make sure that you can fund it appropriately, and it's not going to help those businesses that don't have money or finances available.
And Brad, just to jump in there, with regards to equipment, so are we talking any kinds of equipment? Because, there has been lots of talk around digitization. We have to digitize our businesses. So the likes of PCs, printers, laptops, and those things, would those qualify as equipment that we can be thinking about and leveraging through that asset write-off?
Yes. However, they've been available already for quite some time under the small business write-off up to about 50,000, I think it is. But the new extends much further than that. Extends to larger businesses and much larger purchases. So, excuse me, much larger purchases. So that you're now talking about vehicles, you're talking about plant and equipment within your business, and excuse me. Depending on the size of your business, it could be $150,000. It could be more. So it's really extended that to add a lot more to it. This is an extension from something that was put in place during the pandemic. So it's not actually new, but it is a good measure, and it's something that businesses that are looking to grow, in particular, who might find those asset purchases valuable for that growth journey. It's a very good option for them. Again, if you have the money available, and if it's the right strategy for you, right? So these things are all very important to weigh up. Another one which I think is really good is the tax offset. So if you've had losses, you can offset a previous year and get the tax back that you paid. Now that's really, really neat, particularly for businesses that are still struggling. Certain industries, as we know, are still struggling, and that will help them. And so they're two direct pieces for business. And then I guess the indirect pieces, we're seeing a lot of investment in social services and infrastructure. We're seeing a tax back scheme where people get an instant money back if you're in a mid or low income earner. And we're seeing also some changes to the childcare subsidy. Now, these things obviously are designed to create jobs. Create jobs will hopefully create spending. What it will do to inflation, we don't know yet. That's one of the risks. And I think the other thing is that it's very small on the industries it covers. So, you know, there's limited effect. It's certainly not across all industries. But those things indirectly should hopefully flow into more spending and add some value to businesses as they move forward.
Absolutely, and anywhere and any way we can get more value getting going for us is definitely a good thing. So, Brad, so thanks for that, your insights with regards to the Australian federal budget key outtakes from last night. So moving into our discussion around financing SME growth, because this is what viewers are very much interested in. This is very much top of mind. I think it's very topical across the globe, wherever you are with respect to SMEs. Here in Australia, I know Fifth Quadrant has done their regular pulse studies, and I think from the latest studies, I think close to 50% of SMEs are very much growth oriented and looking to be growing and expanding their businesses. In Canada and the US, similar, we're getting those high levels of, 50, around that 50% mark of SMEs are very much really trying to plan towards, growth and expansion. But also has been a common occurrence and a key challenge has been getting access to financing to be able to undertake those growth imperatives. So, Brad, really looking to get you to provide some of the insights in terms of, with regards to financing, what are some of the things we should be thinking about and doing as business owners, as we're starting to plan the growth, but we need to be looking at financing, how we're going to undertake these initiatives. What are some key areas, things that we should be starting to focus on, to be thinking about to make that happen?
Yeah. So first of all, I'm a bit surprised that it's been 50%. I think that everyone at the moment, with the amount of stimulus and just the amount of the fact that we're coming off a low base from the last year or so, I feel like every business should be focused on growth this year. I mean, I understand there are some industries like international travel, maybe that's not possible, but most industries, I'm really surprised it's only 50%. So if you're an SME, get your growth hat on, start to think about your growth strategies, because it is going to be important, and there's a lot of opportunities that have been, created through COVID. So really important to jump on those early. So
very good point, Brad. Very good point in terms of, it's important for SMEs to be looking at ways of, in terms of their business model, in terms of looking for new opportunities, either with current customers, new customers, and new markets. Absolutely. But turning back to my original question, in order to make that happen, even if they are identifying some of those opportunities that they want to take advantage of, developing those new models, what are some of the things, given that for some, getting financing that's going to, knocking on the door of a traditional bank is a challenge? What are some of the things that we can be doing to make some of that financing, to make operationalizing and capitalizing on those opportunities a reality?
Yeah. So there's lots and lots of cash flow strategies out there, and they're all valid. I'm going to go through sort of 3 of the ones that I think are good for a lot of businesses right now. Every strategy has, pros and cons and costs and benefits. So it is important to, factor that in to your business and understand what's going to work for you. But, you mentioned borrowing, and that's a really important one at the moment, because interest rates are low. And so borrowing is an option, and it's important to be strategic with borrowing, right? So if you were going to borrow for an asset, we just talked about the instant asset write-off, maybe you can get a double or a triple whammy here, right? You can get GST back, you can get the instant write-off, and you're paying low interest rates in order to get that equipment, in your doors. Now, not everyone's going to qualify for that, of course. And that's a challenge. And you've also got to pay the interest back over time. So you've got to make sure that you're generating enough revenue and enough profit from those assets to get that money back. And that's really important when you're thinking about borrowing. You've got to make sure that whatever you're putting it towards, you're going to get more back from it. So there's a few key strategies around borrowing. One is, typically a line of credit borrowing. And this is where you are looking at, I need money on a month-to-month basis to pay the bills, but I don't need it because I'm not making money. I just need it to manage and balance the timing of those bills. And it can be a really effective strategy if you get discounts from your suppliers, because, if you think about that, let's say you get 2% discount on an invoice, which is a relatively low discount, and you're dealing with these people every month. Well, over 12 months, that's 24% discount over a year. and your interest rates now, maybe you're getting 8, 9, 10% interest rates for businesses, right? So you're actually making a profit off that. So that's, that's the way you need to think of it. Now, there's lots of non-bank lending out there now too. It's been a massive increase in it. It's really important to understand the terms and conditions of the non-bank lending, because the big banks went through, here in Australia at least, went through a Royal Commission, and they're very cautious about customer service and making sure they're not ripping people off. But non-banks haven't been through that, so you do have to just be very cautious about what you're getting into. But there are some really neat things out there these days. There's a number of sort of afterpay type or zip pay type groups for businesses, where you can get your invoice paid immediately. You pay a commission for that, and then they deal with the risk, and you don't have to worry about it. Yes. You do need to make sure that where does the risk sit? Does it come back to you if they don't pay or not? So that's an important one to understand. There's also, what we call invoicing line of credit. Usually what they do is they'll secure against your debtors. So the great thing about non-banks is that you don't have to secure against your house or your vehicles. Often it's against softer assets, So if I've got people that owe me money, if I bill monthly and they owe me money, I can use that as a security to then get a line of credit. And some of those are quite reasonably priced. And then a third one, which has been around for a long time, is factoring. And that's where you actually sell your debtors. So, if I have all of these people that owe me money, and I sell them to a collector, and maybe I sell them for 75 cents in the dollar, I get the money up front and I don't have to worry about it anymore. So there's a number of those things that can help. Of course, they all cost money.
Right. So, Brad, in terms of, for the benefit of viewers who are not familiar with some of these non-traditional sources of financing, how does one go about researching to learn about some of these different options, factoring and some of these other approaches? Do you have some suggestions as to where they might look, or if they onto particular websites, or if they're going to be typing in on good old Google? How do we go about if we want to start learning about some of these different options so we can weigh out the pros and cons?
Yeah, there's a number of business websites like Small Business Insider. Also, there's one called Daily Accountant, which, being an accountant, I subscribe to. They often have these sorts of things in the media. Also, just looking up non-bank lenders, looking at financing for small business, you'll find some of these things. I think it is really important to, get someone involved that can help you understand the fine print. That's a really integral part of that, because you've got lots of them out there now.
And when you say, is that like a financial planner, business banker, your accountant?
Yeah, typically it's going to be your accountant or even a lawyer for a larger, larger loan scenario. I mean, there's so many options out there today. It's incredible, but there's positives and negatives to every one of them.
Yeah, so it's important that people do their research and also get proper professional advice, so that they are guided as to they have a full understanding of what's involved, what they're getting into, and then what's the best approach given their business situation and what they're trying to achieve. Fantastic.
Absolutely, and how to exit that relationship is really important. Okay,
very good. Any particular things they should be mindful of in terms of the how to exit? Any
just that whether there's any costs, whether the risks get transferred back to you again if I've sold my book and I want to exit this line of credit, do they still have ownership of or a lien over my debtors? It's when you think about it, you're mortgaging things in your business, you're mortgaging your customers. The other thing to think about is will they directly contact your customers? Is that what you want? So these sorts of things are also important, right? If I sell my debtor's book, someone else is now collecting it. I have no control over what they say and how they treat them. So these are things that you really need to consider for your business to understand what could be the impact and the risk.
Okay, great. That's really good to know. Brad, so in addition to borrowing, what are some other considerations that we should be keeping top of mind when we're thinking about financing our businesses, to grow our businesses, to move forward? Are there some other key financial considerations we should be taking into account?
Yeah, look, there's the next two. We're talking about things that we can do internally within our business that can have a big impact, and they're really low cost, and they're low risk. So they're things that every business should do as a matter of course, regardless of growth. But and one of them is really focusing on your inventory, or for a service business, your work in progress. And that's really, what are all the bits and pieces that we have sitting around to do jobs, right? So what are, if you're doing, if you're in the business of some sort of commercial services,
yes,
you'll have inventory of consumables. You might have equipment that sits around that you take out to sites and do things with. Is everything that's sitting there, valid? Is it up to date? Do you need it all? So understanding the level that you really need to service your business, and only buying those things that you need right before you need them. And that can have a massive, massive impact. I've done some work for a maintenance business, and it was somewhere around the $30 or $40 million a year in cash flow that was able to be increased by just significantly reducing the amount of parts and things that we had in inventory, and having a better relationship with the vendors who could supply them more quickly. And in some cases, we actually paid more for it. But at the end of the day, it was better for them. So it's important to think about, I've got this stuff sitting here on a shelf. It's money. It's money sitting on a shelf.
Okay. So Brad, with that point, and that great point that you've mentioned, so would you be advising then that as business owners, we should be doing a bit of an internal review? I'll talk from a service business perspective, to be looking at what are, from a work in progress perspective, what are those different assets or resources that we're using, and really kind of making a serious evaluation as to what do we need, when do we need it, and then possibly be looking to make some adjustments either with respect to the suppliers or the arrangements we have with our suppliers. So doing that internal review and audit, is that something that you'd be suggesting that businesses should undertake?
Yeah, definitely. Where people have a typical approach here is to have a minimum and a maximum limit. And so the idea that what you're doing is you're saying, okay, how much lead time do I have for something to be able to get something in the door, and can I improve it, first of all? Second of all, with that lead time, how much do I need, given that I know I need 4 weeks, 6 weeks, 8 weeks? Now, I know at the moment with the pandemic, lead times have been messed up for overseas and things like that. So this is probably a little bit harder for people to do if they have international suppliers. But you want to then keep things within that minimum and maximum. So when it hits the minimum, I need to order some more. When it hits the maximum, you say, well, we're enough. We don't order any more than that. When it comes to work in progress for service businesses, there's an additional piece, which is billing. So your work in progress is, I've done this amount of work, maybe I've done 100 hours of work and I haven't billed for it yet. So that's your work in progress. So one of the key things you can do here is you can look at structuring your billing approach a little bit differently. And you look at potentially billing something up front, or having more regular incremental billings, or maybe even having a billing and payment up front. And I did some work with a major telco a number of years ago, where we went to everything had to be prepaid. And they lost some customers over that, but ultimately they needed to gain a couple $100 million in cash flow in order to continue to manage the business. And it was a phenomenal success, in the sense that, initially there was some nervousness around what are we going to do, and in the end it actually became a positive, and they started marketing it as a positive. Don't worry about your bills. Sign up, register, we'll take care of it, and we'll promise there'll be no bill shock. And it became a real driver for business, for new business, once they got their head around it. So thinking about how often you bill, when you can bill, can you put in incremental steps? Can you put in milestones that say, okay, well, we've done this part, pay me for that part. These sorts of things in work in progress are really important. And then staying on top of that invoicing cycle to make sure that it happens when it should happen.
Right. So making sure you have appropriate systems to be able to monitor and manage that. One related question that just popped into my mind, Brad, as we were talking about the different payment strategies, approaches, and that payment up front. In terms of the payment up front, should we be providing a discount as an incentive that if you pay up front, you'll be giving, get that 5-10% discount? Is that something we should do, not do? Just kind of curious as to your point of view with regards to that, as a means to encourage that upfront payment.
Yeah, look, it is a strategy that can be used. You do, if we go back to the whole borrowing piece, where if you're offering 5% a month over 12 months, it's a big discount. And, if you're going to do that, would you be better off borrowing the money instead, right?
Okay.
So there's a cost benefit to look at.
Right.
It's not to say that a discount shouldn't be offered, because it really comes down to your circumstances. And if you have a high profit margin business and you want the cash flow, then it makes sense to absolutely to offer a discount. So it's a tricky one.
Right.
Yeah, it comes down to how important and how much value do you get from that cash flow.
Right. Okay. Good to know. Yeah, very good to know. Excellent. All right, Brad. So you've covered off borrowing. You've talked about, payments and, and looking at what assets we have. What about the old, good old P of pricing? Because pricing is an area that I think all business owners, new, highly experienced, it's something that we often have a challenge with. Do we price to, different pricing strategies, try to price around value, all of those sorts of things. What tips can you give us in terms of financing, trying to improve the overall profitability, performance of our businesses, as well as a means of financing, growth moving forward? What are some tips, advice you can provide us around pricing? Because that's always an area where, off the cuff, you'll see these experts say, well, raise your prices. If you want to grow your business, that's an easy way. But it's often easier said than done. And in this environment where there is hesitation, and I know from a B2B perspective, more people are involved in the decision making, and they're taking longer to do so, and they're being very scrupulous. So would appreciate some guidance. I think our viewers would appreciate some guidance as to how to deal with the good old pricing element.
Yeah, look, profit maximization is probably the best way that you can ensure cash flow, because it's long-term, it's repeatable, it's the gift that keeps on giving. And pricing is a big part of that. Pricing strategies. There's two pieces. You've got your revenue cycle, your delivery cycle. It's really important on the delivery cycle to remember that, we have a 10x revenue model, which says that if your net profit's at 10%, if you have a revenue of $1 million, you spend $900,000 and you're up with $100,000 in profit. If you wanted to have an additional $500,000 in revenue, you would get $50,000 profit. But the reality is that you can often save money by being efficient, and that $50,000 that you save is worth $500,000 in sales. So that's a really important aspect to look at from a delivery point of view. And then you have the revenue cycle, and the revenue cycle is such an important piece. As you said, Michael, I mean, pricing model is so important. And I like that you said value pricing, because a lot of people get stuck on costs and they think about the cost to the customer. And I'm always interested in, when I speak to people who tell me, I'm in a very price sensitive environment, I can't raise prices, people are only competing on price, I have to do, and I can't compete on price, I'm having trouble with it. And I had a conversation about this just the other day. And, in the end, I usually ask them, well, do you have repeat customers? Yes, I do. Are you the cheapest? No, I'm not. So why are those repeat customers coming to you then, if it's all based on price? And often it's not based on price, it's based on value. And so value-based pricing is super, super important. And one of the strategies around value-based pricing is to put it as, first of all, you need to really, really understand the cost drivers in your business to come up with a really solid pricing model. And that's really important, because, if you have high fixed costs, let's say you have lots of equipment in your business, your pricing model will be able to reduce as you get more volume, because you've got this fixed cost at the bottom, you've got less variable costs. So you'll get to a certain point. If you look at something like investment banking, they have about $1 million rate for a platform where they need to spend $1 million no matter what happens. But once they get $1 million in revenue, they break even. Once you go above that, almost every dollar is profit. They're like at an 85% profit model once they get above that break even. So they can afford to have low prices to get everybody in, because they know they have to get over that $1 million mark, right? So it really depends on your business and your model, but having a pricing model is critical, because then you know what levers you have to play with.
Yes.
How much should or shouldn't I discount something? And then the other piece that I find really, really valuable is to have a psychology-based pricing model. And what I'm talking about there is that you're setting up a pricing model that gives customers options. So they may have, and software companies do this really well, right? If you look at even something like Zoom, everyone's using Zoom these days. They've got a free entry point, they've got a midpoint for pricing, and they've got an enterprise price. I think they've got a business and a pro, and then an enterprise price. So what they're doing is they're throwing in value at each of those price points that is not expensive for them to deliver, but is more valuable to me as a customer. Now, I'm not saying that every service business should have a free price point, but you can still take a similar approach where you say, well, here's my basic. And I went through this recently with a commercial cleaning business, and we said, well, the basic is that's your OH&S. If you do the basic, you probably won't get sued if someone gets sick in your building, right? Mm-hmm. And then we say, but if you want more than just people aren't going to get sick and die, here we have the next product, the Sparkle, and that's going to be adequate for most businesses. It's going to give you this extra, and there's things that are thrown in there that are really good, but they don't cost a lot to deliver. And then we had the premium side of it, which was the diamond service, which funnily enough was really popular with very high professional services type businesses who pay their staff very good money, because for them, they said, I want a really good, nice environment for those staff that we pay a lot of money to want to come into work every day. And so having those three models allows you to capture clients that you might not have been able to capture before, and allows you to capture them at a profit margin that you might not be able to do also. And the psychology of human beings is that there are some people who will only ever want to pay the lowest price, but there were some people who never want to pay the lowest price. Yes. So all you're then doing is demonstrating the value that you can give for that higher price. Yeah. And that is a very, very powerful pricing model.
Yeah. And that is so true, Brad. I agree with you 100%. And I think it really comes down to it. So it's two elements. It's understanding your cost drivers within your business. And then what are those elements? But it's also about understanding your customers. And in B2B, we need to understand those business decision makers and buyers. What are their value drivers? What are their priorities? What are they seeking? And then it's really marrying up the two to see how I can deliver value to those customers, to those buyers, and where we can leverage those elements within our business that aren't all that costly, like adding in, let's say, reporting or free trials of certain of new products and services or what have you, but where you can build in those things so that you can deliver lots of value that the customer seeks value for and will pay more for. And in some cases, you do have your premium customers that want to pay a lot, but it doesn't necessarily take. It's not from a financial perspective. It's not harming you from a cost perspective. So it's really, so you've really highlighted the importance of doing your due diligence to understand your cost drivers, but it's also important that you need to understand your market, your customers, and in B2B, we must understand the buyers, what they value, and then see how we can marry it to really deliver, to build in lots of value that will help us maximize profits and deliver value. So it's a win-win. So yeah, 100% agree with that. Absolutely.
Yeah, and one thing that resonated with me there, Michael, made me think about support. For those service businesses, adding in additional support can be low cost, but also gives you a chance to speak with the customers again and learn what they want and potentially sell more into the business. So that's a great way of adding, intrinsic value and a little bit more margin in there. So if you're delivering well, you won't have to support. If you're not delivering well, then of course it'll cost you in the long run. But let's assume that we're all out there to do a good job, and that all of your viewers are the same. Then it's a great sort of additional item that you can include in a package.
Yes, I 100% agree, and support, and you can deliver that through many ways, online reporting, etc., training. And in this environment right now, a lot of businesses are looking for support as they're looking to develop new products and services, new business models, new ways of doing business. They're needing that support. So you as a service provider can often provide that, what seemingly is relatively easy, no cost, but can be of high value, that you can be building those in, because that's something that is highly valued and sought after, including amongst our own fellow SMEs. So support, I think, is a great way to deliver value. And you're absolutely right, having that additional engagement where you can build the relationships, get that deeper understanding, which can give you guidance as to further opportunities, the whole work. So it's a win-win from a number of perspectives, definitely.
Yeah, we love win-wins. And actually, I remember we were talking, Michael, and you were going to talk a little bit about some of the strategies that help us grow and some of the things that businesses are looking for. So sure. I'm done from the finance side. I'm really looking forward to hearing a bit more about some of the growth strategies and what businesses are looking for. So it's great to hear they're looking for support.
Yeah. So Brad, you've really given us some good insights as to how we can finance. In terms of some of the things that we can be doing as SME businesses, there are kind of two strategies, and particularly for those of us in B2B, the two strategies that I think every SME should be at least considering as part of their growth strategies. The first one is what is called influencer marketing. Now, by influencer marketing, I'm not talking about getting the Kim Kardashians, getting your famous athletes, famous people. It's really about within your industry, within your niche, who are the go-tos that your target audience, so your target customers, your target decision makers, go for what my business mentor calls for AIR. Who do they go to for advice, insights, and recommendations? So these can be people that are highly regarded within your relevant professional and industry associations. They're the ones that are, hosting the virtual events, conferences, folks hosting the podcasts and the blogs related to your industries, the journalists pertaining to your industry sector. So it's really those go-to people within your industry, within your world, for which 99% of the population, you drop that name, they'd be like, who? They have no clue. But if you're in that space, you're going to those conferences, you're a member of those associations, you're listening to those podcasts, and it's about reaching out to those people and trying to establish a relationship with them, because it's been found that customers will often, 80% of the time, adhere to the recommendation of a deemed influencer, a trusted, regarded advisor in their industry. So it's about reaching out to them, and you might get them to, because influencers are a great way to get that reach, that credibility, and to build that trust factor with your business customers. And the whole advertising now, there's a degree of mistrust in B2B. So when you can reach out and align yourself with those trusted, highly regarded individuals, and that might be doing things such as you might get them to speak at an event, you might get them to participate on a live stream discussion, they might do a review of your product or your services as well. You might be involved in one of their events as well. It's a means, again, of you building that credibility, building that reach, and building that social proof that can really help you gain their credibility, the penetration and reach in those markets that you're going into. Because often business decision makers, they don't only look at their own peer group of colleagues and contacts, but they'll also look at who are the go-tos, those regarded people within their industries. So really taking the time to really understand who your target decision makers are and where do they go to in terms of who do they listen to, who do they talk to, what are they reading, what events they're attending, and tapping into those people can be a really great way that you can really make a lot of reach and cut through to new customers and breaking into those new opportunities. I myself, Brad, have used it, and it has been a great way how I was able to, when I wrote my book and was trying to get into the Canadian startup community, aligning with one of the influencers there and getting their endorsement and getting in. It can have quite a momentum ongoing effect. So influencers, so finding your micro influencers, the go-to in your industries, is a great way because it's low cost. It's often about maybe you might collaborate, write a blog, do a live stream. They might speak at an event or vice versa. You might swap content. So it's low investment in terms of from a financial standpoint, but the reach in terms of how you can get leads, get access to greater pools of your target customers, the impact that can have can be quite significant. So that's something I highly advise everyone, every business owner, to really understand those target niches and industries they're going after, and who do their buyers go to for advice, information, and recommendation, and really seek them out and see how you can establish and collaborate with them. So that's one way, Brad. The second way
Michael,
is go ahead.
Michael, just on that, you mentioned that you were looking to move into a new industry that was new to you. How does someone go about sort of learning who are the influencers in a new industry that I'm not involved
So
in?
so great question, Brad. A good place to start, really, if you're going into new industry, is often starting with, what are the relevant industry associations? That's often a good place to start, because the industry associations, they will have, they're hosting lots of events, and that's where it's often the go-to, where a lot of the subject matter experts will be writing their blogs, having their webinars, doing their podcasts, doing their events. You can get a lot of information around those industries as well. So that's often a good starting point, by doing some research and seeing, okay, who are the ones that are, conducting those webinars, writing in the industry publications, speaking at the industry events. So you can research, learn about the industry, learn about those people, and then you can leverage the likes of LinkedIn to further learn more about them, and then figure out, well, what are the ways where it can be a win-win? Because quite often, micro-influencers, they're often looking to gain more access to more customers, promoting their events, their books, their product. So often it's about a win-win on how you can collaborate and work together. So it can be a very impactful. It takes a bit of research, a bit of work, but it can be really impactful in enabling you to get penetration and helping you to shorten that cycle time. Sometimes these influencers might even be able to give you those introductions to those key prospects, so you can get in to have that first meeting. So it's a highly impactful way to really expedite your growth strategy and building that proof and credibility that we're all often looking for. So that's one thing, one strategy I highly recommend. The second one is advocacy marketing, and that's all about really leveraging your existing raving clients and fans. So those clients and customers that are showing you the love, you really leveraging and working with them, again, to help you gain further reach, credibility with your customers. And so that can be using them in a variety of ways, working with them in a variety of ways. It can be from referrals and setting up formal referral programs, using them in terms of setting up reference programs. So they might getting them involved in case studies, getting involved in testimonials. Again, you might get those people to speak at your events. You might want to do things like the likes of live streams, interviews such as this, and then you can share it across your respective networks. You can be working with them, often customer reference programs, in terms of getting some of those clients and customers to be references on your behalf. As Brad, that's becoming more and more common in B2B. So, you being a business finance expert, someone might say, okay, who can we speak to? Can we speak to one of your clients, Brad, so we can get an understanding from their perspective, what it was like to work with you, what value they got from them? Because people are really looking for these authentic ways of just getting that decision maker confidence in terms of they know what they're looking for, but really having that from trusted sources. So from their colleagues, from other clients, from trusted leaders in the industry. They're really looking for those trusted sources. Advertising, the impact of advertising good for awareness. But in terms of people wanting to, making those expenditures, and especially when we're talking bigger expenditures, they want to have that confidence, so they don't have that buyer's remorse. So they're really looking for those forms of proof that's going to give them that confidence that they're looking for. So case studies, testimonials, references where they can call you directly. And then it's about working with these existing clients as well. So you might work with them to share content, for example. They might speak at your behalf, and you might incentivize them by, let's say, offering trials for some of your new products that you're rolling out. And that can really be a really impactful way of how you can build and grow your business. There's a smart thermostat company in Toronto, Canada called Ecobee. And a key part of their growth strategy, how they went from being a 50-person SME to one of the leading providers in the smart thermostat market, has been through the whole leveraging and building out a very robust customer advocacy program. So those are two real ways, so leveraging your existing clients and customers and coming up with a formalized way of how you're going to work with them and get that mutual delivering of value, as well as targeting your influencers, your micro influencers, essentially, are two strategies that I really believe every SME really should be considering as part of their overall growth strategy, because it's low cost from a financial perspective, but the impact in terms of customer retention, cross-sell, upsell, being able to increase in market penetration, increase in brand presence, it can really put things on a trajectory. And I really think it's quite important now, because we are in a crowded market now where a lot of people, we're all doing the same things, same kinds of tactics. So it's how can you break through with those customers you're seeking to serve is quite important.
Wow, that sounds really interesting.
Yeah.
And it's interesting you talk about referrals, because that's one of the things that it's one of the lowest cost ways to get new customers, and the stickiest customers that you can have. So as you say, leveraging the people that you have and you're already as customers, what a great way to do that.
Yeah, and really putting a strategy around those things, Brad, because there are things that people often think about, but we don't often put a lot of time to. Referrals, you really need to have a strategy, an approach to refer. Who are you going to ask for referrals? When are you going to ask for referrals? And how do you go about doing the referral? Making it easy to refer and setting means for your contacts to be able to do so is quite important. And you need to set that up, because people are often willing to refer, and they've done studies about this. There's a high willingness to refer, but often folks do so because they're not asked to actually make a referral. Or if so, it's like, well, how do I refer? You have to give those that you want to provide referrals the tools and make it very easy for them to do so. Like to the point of, crafting out, okay, here's the basic template, email template. Here you go, insert name, tweak 1 or 2 sentences. This is what I'm looking for, and send it out. You really have to go make a strategic strategy and have a program in place of how you're going to do references, referrals, these kinds of advocacy programs. It takes, like I said, a bit of effort, but the impact of what you can get in terms of the kinds of clients, shortening your cycle times, having higher conversion rates is pretty phenomenal. So, Brad, this has been a really good discussion that we've had today. You've given us some really good insights around financing and some of the things that we need to be thinking about, pricing, borrowing. It's been really, really useful. If there was just 1 or 2 final nuggets, tips that you'd like to give the audience, our viewers, listeners today to remember and think about with regard to financing their SME journey moving forward, what would that be?
Yeah, the first one would be look internally first. There's a lot of opportunities for cash flow and having more cash in your business, within your business already. And then the second one would be get the right advice. Make sure you get that advice around what you're planning to do before you do it. Don't find yourself in a sticky situation a year from now because you didn't get the right advice about whatever it is that you're planning to get more cash flow from.
Those are really, really great tips. And I think professional advice is something that we as all SMEs really need to make sure we're getting, because there's just so much going on, so much that we have to be thinking about doing now as we're trying to compete moving forward. And in many of our industries, it is very competitive. And so there's lots of things that we need to be doing to get that cut through. And so making sure we have the right advice is quite important. And last but not least, Brad, for those that really want to connect with you to learn more about, financing strategies, approaches, getting a bit of an overhaul in their business, how can they reach out and connect with you?
Yeah, I mean, I'm very active on LinkedIn, so feel free to reach out to me on LinkedIn. And then also I have a website, of course, lucrature.com. So that's very easy to jump on there as well. You can book an appointment with me. And I also have a great ebook, which is a framework for profitable growth, which maybe I can share with you, Michael, and perhaps people, if they wanted to get hold of that, it would help them.
Absolutely. What I'll be doing is I'll be putting in the show notes. So when this is going to be on my YouTube channel, definitely I'll include the links to your website and to the ebook as well. So Brad, thanks again for coming on the show and talking to us. It's been really valuable. Listeners, hope you found this very valuable. For those of you that would like to learn more in terms of B2B growth strategies, what you need to do from a strategy perspective in terms of developing the right strategies and putting them into action, you can reach out and go to my website, listeninnovategrow.com. I will have all those details of myself and Brad in the notes for this, which will be available on my YouTube channel. So please be sure to share this episode with your colleagues, business contacts, clients who may find this useful, as I think financing our growth initiatives is something that's important to all of us. Brad, thank you again. And to our listeners, thanks again. And until next time, take care and stay safe. Bye for now.
Thanks so much, Michael.